Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 17th of December, comes to you from London. And the big news this morning in markets is that Bitcoin has smashed the $20,000 level. It did it yesterday. We see that breakout. Remembering this is my weekly, my daily, and my 60-minute chart with the corresponding point and figure charts. And here we see the weekly candle. So that's the candle for this week. This is the candles for today and yesterday. So we're seeing these two massive daily candles. And of course, that translates into the 60-minute chart, just steady growth on the Bitcoin there. And we've got a target on the 60-minute chart of 24,256. That's playing out another 5% higher and 25,000. So Bitcoin just rocketing to new highs. So that's big news in the market this morning. Taking a look now at current, and we're seeing a lot of green. So our market's looking pretty strong. Dollar continues to fall. It's through the 90 level on the dollar index, and we're seeing that's giving us another bad week. Big move down, sideways, big move down. This is the consolidation, then the fall out of that pattern. Downside targets to play for. This target here be seen since the middle of July at 88, and that target is playing out. You really cannot ignore these targets. So we're bearish below the cloud on all three time frames. That means, of course, that the euro is looking stronger against the dollar. Again, we saw this jump, the sideways pattern, and then the move out of the pattern. We've talked about that many times before, and so we're just seeing the euro just strengthening all the time, bullish on all three time frames. The Japanese yen is nudging the 103 level, so that's looking pretty bearish for the dollar, and we've got targets to 101, 102, 101, so we are seeing dollar just weakening there. And sterling sitting at a 2-year high against the dollar now at 135.82. So looking much stronger. Brexit hopes helping there as well, of course, but it's very much about dollar weakness. And against the euro, we're actually up here as well the last couple of days, sitting at 111. So sterling finding quite good support. Still has work to do on the long-term chart, of course. Bitcoin, we've talked about that $22,500 level, and we have seen it as high as 23,700. So it's really pushed much higher. The US stock market was nudged higher yesterday. The S&P was up slightly, and the Nasdaq relatively flat. We are just struggling to really get motoring on the tech stocks, and the tech majors. We'll take a quick look at the Dow. So still holding the $30,000 mark. It was down slightly yesterday, but we're seeing a strong showing on the futures today. Comments from the Fed helping, and we're seeing the S&P future up 0.5%. The Nasdaq E-mini up 0.5% as well. Bullish on all three time frames. Upside targets. We still have got quite a lot to play for there. 12%, 15%, 2 and 3% higher. But it's interesting. We'll take a look at the majors, because that's the slight concern still on the Nasdaq. The VIX volatility falling further back below the cloud on that short-term chart. The fear index not looking so bad. The DAX in Germany this morning is up 1%. The CAC 40 is up 0.4%. So that's much higher. And the Japanese market was up 0.25%. Hang Seng up 0.8%. China, the Shanghai index was up 1.1%, so looking stronger there. It's not yet breaking out though, and if we look at the Sensex in India, we're up 0.5%, just pushing higher all the time. Look at that steady increase since September. Really amazing. The Indian market looking very strong indeed. The Aussie market was up 1%. Still has work to do to break to new highs, unlike the US, but still looking pretty strong. Weak dollar, of course, is helping commodities. We're seeing gold up. It's looking bullish on that short-term chart. Not quite recovering yet on the daily, but we do have an activated upside target now to $2,040. And of course, if we break to new highs, we activate a target to $3,000, which would be massive for next year. Silver sitting at 25.71. Support was at 23. So we really look like we're in this flag pattern and ready to break and run again. So looking good for silver. Copper was up 0.6%. Chinese demand for the world's most important base metal by use is certainly pushing higher. And if we look at US 10-year yields sitting at 0.92%, again, Fed comments just pushing us slightly higher there. The tech majors are the thing to just have a little bit of concern about. We're not making new highs yet on Apple. We had a strong day up the day before, strong week on Apple, but we're still not making new highs. Amazon, much the same picture. We're not actually managing to make new highs, which is a slight concern for the market when the market is making new highs. So we're seeing the tech majors lagging slightly. We're seeing that Google has actually broken to new highs, so it's broken its September high. Microsoft hasn't, so we're still below the high that we saw in September, and Facebook hasn't. So we go into the Christmas period with that slight concern that the tech majors are not managing to make new highs. That's just a little bit of a drag on the market. Looking at the energy mix, we've got Brent crude at 51.67. We went bullish for clients this week on Brent crude, and that's what we've done. We've moved higher, much as we said we would. WTI, much the same level here, breaking that level yesterday to new highs. Upside targets here, pushing higher, so looking good there for Brent crude. US nat gas, we were also bullish this week, and we've really just shown that little bit of a recovery on the daily chart. This is the daily and the 60-minute chart, and we've just started to break out, not quite as convincingly as crude. We found coal hit the buffers. Of course, the story for coal has been that the Chinese have been embargoing Aussie coal, which has had an impact on Richards Bay and Rotterdam, and so this is API2 Rotterdam coal moving much higher with that reduced demand for Aussie coal pushing into other coal markets. And looking at the emissions market, holding that 31.82 level, looking very strong indeed. So that's quite good. We do have a downside target, but we have upside targets which we're favouring. Again, we're bullish this week. We've pushed higher there as well. Gas markets have pulled back this morning. We've seen massive moves in the gas market this week, especially in European gas. That's been driven very much by a cold spell in China, which has been driving LNG prices, which has in turn driven gas prices globally. So we've seen TTF breaking out there. And if we look at even Gazpool, we've seen moves higher. We're just pulling back the last couple of days there. German power sitting at 45.60. Again, the breakout on German power was pretty convincing at the start of this month. We've just coming back off the top a bit. 47 seems to be the resistance level, and that might be a level just too far for us to break at the moment. No clear upside target saying that we will. Taking a look at some of the other power markets, we've got French power sitting at 49. It's just above its resistance level. So if we can go higher, we've got a target to 57. Keep an eye on your OTC prices, of course. And we are just seeing Nordic power still a little bit in the doldrums, not breaking to new highs like German power. So we are just in this range between 1680 and 2070 on the Cal. And of course, that's feeding through into the quarterly contract as well. UK power has been the breakout as well. We've seen that sideways move for a few months and pushing higher, just coming back a little bit. Again, your OTC prices will give you better visibility there. That's it for today. Until tomorrow, happy charting. See you then.